Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Thursday 21st of November. A very slight element of caution still in the markets with what we've had in recent days. A market, certainly on the Forex basis, starting to consolidate, not really finding any real decisive direction either way. There's been a degree of caution that's come through on markets. You can see that through treasury yields falling away. You can see that through the fact that the gold price and the yen have regained some ground. But interesting sort of little element of consolidation coming in, a bit of caution today. Those treasury yields are sort of hovering a little bit. Gold is sort of around the flat line again, yen sort of a little bit flat as well. I mean, it's sort of taking on the fact that the markets are becoming increasingly wary as to how exactly to position for this US-China trade dispute. There is an expectation that is dwindling about this phase one of the agreement. Seems as though that China is saying that it could be pushed back into 2020 before they get a potential signing, and that sort of really does pose a lot of questions actually as to exactly how the US would react to, or Donald Trump would react to those tariffs which are meant to be raised on the 15th of December. How do they react in that scenario? So the markets are a little bit cautious, and you can see that also through equities which have fallen back. We saw in the last couple of sessions just signs of rolling over on Wall Street, more pronounced across the European markets today. And I'll talk through the CAC 40, the French index, in my chart of the day, and you can see that that is starting to turn more corrective. So some interesting moves we are seeing sort of developing, and it seems as though that traders are a bit more cautious as to exactly how to position for risk now. So with regard to the data points today, we're looking more towards the States in the afternoon. We've got the Philly Fed at 1:30. You've got jobless claims and also the existing home sales. Jobless claims 219, down from 225. Well, we saw that 225 was above the sort of 3-month moving average, which has been a pretty good gauge actually over the last number of years. 89-day I take that as, and that is around 218, so drop back towards that moving average, but any sort of consistent basis above that, and certainly above 230, would sort of point towards a bit of a deterioration in that jobs market. We're also looking out for the Philly Fed this afternoon, improving to 7. Now that would obviously be up from 5.6, so slight improvement, but the Philly Fed is a bit of an outlier, in terms of all the regional Fed surveys, that's one of the more positive ones. Also, existing home sales at 3 o'clock, expected to grow 1.4% to 5.47 million. So that takes me to my chart of the day, which is the French CAC. Now, as I said, European markets are starting to roll over. You can see that through the CAC, breaking this uptrend, breaking below that support at 5860 area, which had been holding over the last couple of weeks, but gapped down below that today, and actually the gap has pretty much been filled, but look at these momentum indicators. MACD bear cross, stochastics bear cross, confirming with today's move potentially. RSI falling under 60, so this is a suggestion that the market is starting to move into retreat, and you'd say that around the 5,700 area to 5,007 sort of 30, 40, it seems to be a sort of a breakout area from September, October. So that's now a basis of support, also around where that 55-day moving average currently is. So we could see a little bit of a retracement move on that French CAC. But that that 5,860 area becomes a basis of resistance. You can see that old support broken, becomes resistance. But you got the hourly chart taking more corrective configuration as well on the RSI, failing under 50, moving towards 30, MACD lines underneath neutral. So it all suggests that could well be a market now coming into a basis of selling pressure. You've got yesterday's sort of reaction high up towards 5,900 area adding to that resistance overhead. So you could argue a sell zone developing between 5,860 and 5,9 on the CAC. So this is turning into a market looking more like a corrective move. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.